People have been using gold as an investment and store of value for literally thousands of years, and that's as true today as it ever has been. With the price of gold skyrocketing over the last 12 months, more and more people are looking to invest in this precious metal. This video will discuss 3 methods which you can use to invest in gold in 2025. Hi everyone, welcome back to the channel. My name's George and I'm a finance professional working in the UK. And recently I made a decision to invest some money into gold. And along the way, I did some research to find out the best ways to invest in gold in 2025. And broadly I found that there were 3 main methods. Firstly, that's purchasing physical gold and storing it yourself. Secondly, there's buying gold ETFs or exchange traded funds. And thirdly, there's buying physical gold and having it stored by a third party. This video will discuss the pros and cons of each method, taking into account the speed, ease, and most importantly, the fees involved with each method. Now, before I did any research, buying physical gold coins or bars and storing them yourself seemed like the most obvious method to me. After all, this is what people have done for literally thousands of years. You know, having a physical gold coin or bar that they store in their house and they look after it themselves. And this is still very much possible in the modern day. And there are many benefits to doing so. For example, if you're in the UK, investment gold doesn't attract value-added tax or VAT. And if you buy gold coins that are minted by the Royal Mint, i.e. gold Britannias or sovereigns as they're called, then these investments won't be subject to capital gains tax, i.e. any gains in the investment over time won't be subject to tax. Also, it's a very tangible investment. You know, you can actually hold your investment in your hand and you're not relying on any third party to facilitate your investment or look after it on your behalf. And after all, gold is kind of like an insurance policy, insuring you against adverse economic or political events, and sort of having physical possession of the gold is almost part of that insurance policy to a lot of people. Now, if this method sounds appealing to you, I found the best way to actually purchase physical gold in the modern day is to go directly to websites like the Royal Mint, who actually mint many gold coins and gold bars in the UK, in particular Britannias and sovereigns, which, like I mentioned, are exempt from capital gains tax. Alternatively, there are third-party partners of the Royal Mint, for example Bullion by Post, who offer very similar gold coins and bars on their website, but usually for a lower cost than going directly to the Royal Mint. I encourage you to have a look at these websites. Links are all in the description and have a look for yourself. Many also offer free UK delivery on orders over a certain value. Now, I'm in no way affiliated to these sites or any other platform discussed in this video. It's merely what I've used personally. Now, probably the main drawback to purchasing physical gold is actually the fees involved. Now, you might be thinking, if sites like Bullion by Post are offering free delivery, then where do the fees sit? Well, if you look at the price charged for, say, an ounce of gold, Bullion by Post may be charging, say, £2,100, whereas an ounce of pure gold is actually only worth £2,000. So that difference of £100 is their commission, essentially. And in some cases, I've seen this commission get as high as 4 or even 5%, which, as investments go, is very, very high. I think if you compare this to, say, an index fund, you know, those fees can be as low as 0.1% per year, or in some cases, even lower. So this high fee charged often puts many people off investing in gold altogether. But it really shouldn't do, because in the modern day, there are many other ways that you can be exposed to gold without paying such high fees. And one of these ways is purchasing gold ETFs. Now, to briefly explain, an ETF or exchange traded fund is essentially an investment fund which holds various different assets, from shares to bonds to commodities to other things. And what the investor can do is buy shares in this fund and then be exposed to price changes in the underlying assets. And it's exchange traded, meaning that it can be bought and sold with other traders during market hours. Now, a gold ETF is very simple. It is just an investment fund that holds one asset, gold. And in nearly all cases, this is physical gold bars, which is usually stored in a vault underground somewhere. And the investor can then buy shares in the exchange traded fund, and the price of those shares go up and down with the price of the underlying asset, which is gold. Now, although you're not actually buying physical gold, you are just buying shares. This method allows you to be exposed to price changes in gold for very low fees, sometimes even 0 fees. For example, there are online platforms, for example, Trading 212, Freetrade, and others, which allow you to buy shares in ETFs and gold ETFs in particular for absolutely 0 commission, so completely for free. You know, compare this to the 4 or 5% fee that we were seeing with physical gold, and that's a big, big difference. And also, another benefit of gold ETFs is the very high levels of liquidity that it offers, meaning that it can be bought and sold easily, cheaply, and quickly. Now, compare this to if you, say, had a gold coin that you wanted to sell. Now, there's no way that you can do this instantly unless you've already got a buyer lined up. And more often than not, it's going to incur some sort of fee. You know, for example, you might have to take it to some sort of gold broker who's inevitably going to charge you some form of commission. And it may also take significant time and cost to find an ideal buyer for your physical gold. Whereas with gold ETFs, this isn't really a problem. Now, I suppose the main drawback with a gold ETF is you lose the tangibility of your investment. You are just buying shares like any other share in any other company, and you're still relying on a third party to facilitate your investment. Now, I did come across a third method to invest in gold, which kind of blends the first two. It combines owning physical gold with the lower fees that were associated with gold ETFs. And that is purchasing physical gold and having it stored by a third party. Now, you can do this with regular old gold coins or gold bars. For example, you could go directly to the Royal Mint, purchase a gold coin and pay them to essentially store it for you. Now, this is no better than the first method because you're still paying the high 4 or 5% fee to buy the coin in the first place, and then you're paying an additional fee for them to store it for you. However, the Royal Mint offers something really interesting. They offer something called DigiGold, and I'd encourage you to go directly to their website to read more about it because it is very interesting. I'll leave a link in the description. But essentially what it is it allows you to purchase a proportion of a large gold bar which sits in their vault. And you can purchase any proportion that you like, anywhere from £25 upwards. And once purchased, you are then the legal owner of that proportion of this gold bar. And Royal Mint just acts as like a custodian, meaning that they look after your investment. And although you don't actually ever physically see the gold that you own, you do actually own physical gold, rather than shares in an ETF, for example. Now, there are obviously fees involved with this, but they're often a lot lower than purchasing physical gold and storing it yourself. At the time of recording, the Royal Mint are charging a 0.33% fee upon purchase, a 0.5% annual storage fee, and a 1% fee if you want to sell it back to them. Now, this may be a good alternative for those of you that want to purchase actual physical gold, but want to try and minimise the fees as much as possible. So again, I encourage you to go and have a look at their website directly for more information. Now, I thought it'd be worth briefly mentioning some alternative strategies to invest in gold, in particular buying gold jewellery. Because this is what a lot of people do and have done for many, many years. You know, they'll look to go and buy a gold necklace or a gold chain, for example, as primarily a piece of jewellery, but also as an investment. Now, before I did my research, I wondered, is this a good idea? And it turns out that if you're looking from purely an investment perspective, then absolutely not. And probably most importantly, this is because of the premium that's charged by the jeweller, the jewellery shop, the jewellery designer. You know, there's lots of people along the way that need to make money, they need to make a profit margin. So you're essentially paying for that on top of the value of the gold that you're purchasing. And also, if you're in the UK, then gold jewellery will be subject to VAT or value added tax at 20%. So that's another cost to factor in. So for example, if you walked into a gold shop and looked at a 24 carat gold chain, for example, 24 carat being 99.99% pure gold, and you looked at the price being charged versus the value of the metal that it's made of, oftentimes there's a big difference. Sometimes the price that's charged is actually double what the actual metal's worth. So that would correspond to 100% investment fee, which is just ridiculous if you're looking at it from a purely investment perspective. Now, if you're in the market for a piece of jewellery, then fine, absolutely go for it. But if you're looking from a completely investment perspective, then this is definitely not the way to go, as there are much cheaper alternatives, like the ones discussed in this video. So, what's the best option? Now, this is obviously down to personal preference, but if you're trying to minimise the fee as much as possible, then definitely go for the gold ETFs. As like we discussed, this can be done completely free of charge on online platforms such as Trading 212, Freetrade, etc. But also, if you want to purchase physical gold and you're happy to pay a decent fee, then buying a gold coin directly from the Royal Mint or one of their partners is a very good way to go. Because first of all, it's exempt from value added tax and it's also exempt from capital gains tax in the UK. Or alternatively, you might be interested in the Royal Mint's DigiGold program, which allows you to own physical gold for a lower fee. And it's important to bear in mind as well that you don't have to put all your eggs in one basket. You know, if you wanted to invest, say, X amount of money into gold, you could split that between shares in gold ETFs. You might also put a bit into the Royal Mint's DigiGold, and you might spend the rest on a gold coin, for example. So hopefully this was helpful and it's clarified a few things. And if you have any questions, please be sure to leave me a comment below. I'll be sure to get to each one. Thanks for watching.